Greetings. Welcome to Epicor Eclipse ERP, Terms Code Maintenance. What are terms? Terms are agreed payment terms between the customer and or the vendor. This is not just the payment of the invoice, but special agreements that are on the side, maybe to discount under certain conditions or penalties if not paid within a certain time period. So you get to Terms Maintenance through the Solar main menu under Maintenance and Terms, of course. And when you go to create a new terms, the maximum length for the name is 12 characters. Try and devise some type of standard. Your system, when it comes new from Eclipse, should already have some terms put in place, so just kind of follow the naming convention as you see, unless you have some extravagant reason to do something odd. When you go to create a new record, the period fields that you see there are normally set default by the system. That's a control maintenance record, and it sets it for a 31-day applicable period. And I've never had an occasion to override that, although that can be done. Most terms that you create are going to be set for both selling and purchasing, although there might be some special terms that you might want to set just for one or the other. The default terms are going to be set in the customer and vendor maintenance records, and they can be overridden, of course, in the sales order and purchase order, so the whatever's in the terms default is going to automatically populate in a purchase order or sales order, but the right authorization keys is allowed to override that as needed. So the first section we're going to cover here in our example is the discount section, and the first thing we're going to hit is percent, and that is the amount of discount given if essentially the invoice is paid early, and the rest of the parameters are going to set when exactly the deadline date for that discount is going to be. It accumulates in months and days allowed, so say 31 days would be 1 month and 1 day. Then you want to start the period that it starts to count from, and the selections are going to be invoice date, end of month, or current month ending. Then finally you put in here a grace period, and that's just in case, okay, well, they were a day late. All right, we're going to give them that. So you give them a grace period of 1 day. And so if it goes past the 1 month and 1 day and it's a day 32, okay, go ahead and give it to them. So the final end result here for our example is we're, of course, having no discount in this one, so it's probably not a very good example. But it's read as discount 0% off the invoice if paid in 0 months and 0 days from the invoice date, with 0 grace days back and forth. The next section here is net due, and this is when the balance of the bill is due before the penalties are incurred, when you're going to be slapped for being a bad boy. And in this particular example, we have 1 month from the invoice date, so it's going to be read as total balance due 30 days from the invoice date. The next section is service charges, and these are the penalties that are going to be assessed once the net due date has been passed. In this particular example, you see it's read as a charge of 1.5% of the invoice total will be assessed 2 months and 1 day, that's 61 days, starting from the calendar month end of the invoice date. So not the invoice date, but the calendar month end that the invoice date period was in. And in minimum charge, we see that we're going to assess a charge of at least 50 cents if the 1.5% calculation doesn't get up to at least 50 cents. So whatever one is the highest is the one that's going to win. Now we're going to go through some common variations, and the first one we're going to come across is COD, cash on delivery. And this is pretty much what you'd expect. Everything's 0, everything's due on the invoice date. 210N30 is probably the most common variant that I trip across. It seems to be an industry standard. And as you peruse through this, how it is read as a 2% discount if paid within the first 10 days from the calendar month end of the date of the invoice. Total due within 30 days from the calendar month end of the date of the invoice. Service charge of 1.5% of the total bill, or $1, whichever is highest, incurred 60 days from the calendar month end of the invoice. Here's another common variant. This is 210P30, and this is read as a 2% discount if paid within the first 10 days from the fiscal month end date of the invoice. That's the 30th of the month. The total due within 30 days from the end of the discount date. The service charge of 1.5% of the bill, or 50 cents, whichever is highest, incurred 60 days from the calendar month end of the date of the invoice. So it gives them a little extra grace time from just the plain invoice date. This variant is just a flag for legal action. Essentially, it just puts everything in a holding pattern for 12 months, whilst everyone figures out after the lawyers talk to each other as to who owes what to who and why. On a regular basis, you'll want to run the post-service charges process so that the terms code that you applied will go ahead and generate the penalties to the people that need to be penalized. You can essentially officially nag them to pay their bill. You'll want to do this twice, essentially. You'll want to run the post-service charge process once with the detail invoice preview report and check and make sure that what you did is what you really want to do before you go ahead and print those statements going out to the customers, or else you are going to get a lot of phone calls from very, very unhappy people. Now, in this example, I'm showing that I'm running the post-service charges. The customer field is blank, which means essentially run it to everyone who's past due. This is not normally what you do. Normally, the credit manager just has a few repeat offenders, 10 or 12, for a normal company branch. And usually you'll just want to run the post-service charges just on the top 5 nasty ones and nag them. So don't normally run this to all of the people that are past due, because normally they're decent guys and they'll pay eventually, and the credit manager knows this. So here's an example of the detailed preview report, and you don't normally print this. You normally send it to your hold file and assess it on cost of goods sold, and that'll spit out a wonderful little report that you see here, so you can go and recheck and make sure that these charges are where you want them to be, assessed to the people you want them to be assessed to, before you go send out the official paperwork and get them mad at you. So back to terms maintenance and the menu selection for credit controls, and we have a lot of options here. Honestly, you don't monkey with this usually a whole lot. There are a couple of terms that are usually set up in your system that do have kind of special credit control overrides to them. COD is one of them. Legal would be one of them, as an extra layer of logic in the system to make sure that the cash is either collected or no further orders are done if they're in legal. The most common setting is use customers credit control. That's usually the one that's checked. The change period menu selection does the thing that we started this by saying you never change, which is the first entry in the terms for the period, and that's set in the control maintenance to between 1 and 31 days. That's the range of days that the terms should operate under. And I don't know under what occasions you would ever want to change the operating range of days the term would do, but here it is anyway. This is where you would go to do it, but never change this. The next option off the menu is the discount table, and this is used to set the number of days or months that a new customer has to be with you before they're eligible for discounts. You can kind of meter that out over a period of time. This is an interesting feature to have, but honestly I've never used it. And our final selection is a really interesting one, and that's split payment. And this allows you to create a composite terms code that allows a percent of the order to fall under different terms. So say if you want 50% of the order to be a 2% discount and the other 50% to be net 30, this is how you'd create a composite term to spread the discount across the range. Interesting. I don't know anyone that would want to do this. And this concludes our presentation on terms maintenance. I hope this information will prove useful to you. Thank you for your attention, and as always, I am not Scott Zahn.